Hello, everyone. It's John Browning with Guardian Rock Wealth, and I thought I should at least record something after this silver debacle. And it wasn't just silver, it was gold, it was Bitcoin, it was Ethereum, it was Cardano, but mainly the silver market. And I'm going to actually reference some notes here because I think it's important to understand exactly what happened and arguably why it happened. And this just happened over the weekend, but it's not the first time it's happened. Matter of fact, it happened back in December. So only about a month, a little over a month ago, the same thing happened. There was a crash in the silver market, which then acted as a domino effect and crashed several other markets. And this is where a lot of retail investors get confused. They don't understand what Wall Street doesn't want them to know about how these things actually happen and why they actually happen. So the first thing to note, and this is not a political statement, this has nothing to do with who did what when and what they knew or didn't know at the time, but it is very interesting to me the sequence of events that took place in particularly in the silver market. And this happened on Friday. So the first thing was JP Morgan had a short position on and literally sold at the exact bottom of the market. They sold out of the short position. A short position is when you borrow something and then you need to pay it back at some point in the future, a security of some sort. So clearly it made a lot of money by silver declining in value. So right at the time that it hit the very bottom, they put that trade in, which is very interesting to me. Now, it's very possible that JP Morgan just has a bunch of very, very smart people and somehow guessed the very bottom of the market exactly right, or not. And then you have the London Metal Exchange completely offline on Friday for a time. And then, probably just by coincidence, you have the COMEX in Chicago also going down. And also, we had HSBC, the second largest short holder, also offline at the exact same time. Also, one of the biggest holders of silver out there. And then the COMEX. So, this is where in Chicago, where silver's futures markets are trading. Well, guess what they did? They raised the margin requirements and shook out all the leveraged trade. You said, "Oh, those horrible leveraged people! They should have known better not to leverage their bets on silver." But this is a very common thing to do, and this happens not just with the silver market, but also with all futures markets. Is with any commodity, you trade, say, $10,000 and you get exposure to, say, $100,000 of the commodity, including in treasury bonds. And this is done often to leverage other leverage positions, but more often than that, it's done to hedge positions. But when you were putting up $10,000 for a $100,000 position and suddenly they changed the rules on you, literally during the day, hour by hour, and all of a sudden you need 30,000 for each one of those what was $10,000 positions. Well, what are you forced to do? You're either forced to come up with more than double the amount that you had invested, or you have to do what? You have to sell that silver. All of this happened at the essentially the same time, and right towards the end of the day. Then they waited for the Asian markets to close for the weekend, and that's they're 12 hours ahead of the East Coast. And then they decided, well, let's just make sure we elect a new Fed chair and have that hit the news. And this is a particular guy who is a little bit hawkish than the other potential nominees. So that again hit the dollar, right? So the dollar actually didn't hit it, it actually got stronger, which was unexpected for the market. If the dollar is stronger, guess what gets a little bit weaker? That those dollar replacements, right? So gold and silver, because it wasn't just silver that crashed, it was also gold and also many of the other rare earths, minerals, etc. So those of you who were kind of jumping on that bandwagon, all excited, and had already forgotten about the same thing happening back in December, essentially got crushed if you didn't have your portion control under control. So if you had too much of your portfolio in silver because you're very excited, it hit all-time highs and was just going to the moon, $120 per ounce. And then suddenly it's $74 per ounce within a number of hours. Essentially, all this happened in 24 hours. So this is not the first time that we've seen this. So we go back to 2019, 1982, 2011, and again, like I said, in December, and it's the same players doing the same thing. Often it is a raising of that margin requirements that just causes these things to decline in price. You say, well, why is this? Well, let's take a look back, and let's go back to 1980. Okay, that was the first time, because history doesn't repeat itself, but it often rhymes, right? So in 1980, they had Silver Thursday, and you had the Hunt brothers that were essentially trying to corner the silver market by buying lots and lots of shares. So what do the market players do? The people in control? Well, they just changed the rules. So silver hit $50. They implemented new rules that you could sell your silver, but you couldn't buy the silver. And what happens then? Well, everybody begins to sell because the liquidity isn't there, and the bottom falls out of the market. Silver crashed 80%. And anybody like the little guys like you and me, the retail folks out there, just got crushed right along with it. So then let's move forward to 2011, when silver is up at $49 an ounce. The CME raised margin requirements again. Suddenly, it's down 48%. So this keeps happening. The same narrative happens over and over again. And then let's just quick move up to 2025 December, just a couple months ago. And we had, let's see here, we crashed 13%. So it wasn't quite as bad. But what happened? The margin requirements were raised again, causing the same issue. So it happens time and time again, and yet memories are short and we don't remember. And here's the rub, right? Back in say the 80s, right, when that first one happened, silver wasn't really used all that much for industrial purposes. There wasn't a supply issue at all. So that's the big difference that we see today. Is today we see a significant supply shortage. Every day we fall further and further behind in terms of the miners being able to keep up with the demand for silver. Well, it's not because of the stuff you wear around your neck or in your ears or anything like that. It's because of electrification of vehicles. It's electrification of everything. It's solar panels. It's used in so many industrial capacities. And will they come up with a substitute? There's some already out there, but it hasn't happened to any great degree yet. And that's why we here at Guardian Rock Wealth, because we have our portion control correct, we're not all that concerned. So we were in today, this morning, and even a little bit on Friday, purchasing more silver, more gold at those lower prices. Again, I've said this several times. I say it often that the financial markets are the only place where people don't get excited when things go on sale. Has anything changed since Friday fundamentally in the silver market, in the gold market, in the Bitcoin market for that matter, in cryptocurrency in general, that has drastically changed? And the answer, I believe, is absolutely not. So first of all, you had a crowded trade. So everybody had decided that gold and silver was the place to be, and they all needed to pile into that trade. Then you get those margin requirements that are significantly increased by more than 2 times in a matter of hours. And then the first people had to sell. And then when they sold, the price dropped even more, which created more margin calls on those leveraged bets that were out there. And then it cascaded down and down and down until finally they found the bottom, the last guy out. And we saw today it was still down a little bit, about 3 to 4%, I believe, at the end of the day for silver, a little bit down on the gold, but silver will be more volatile than gold in almost any scenario that we see going forward. And it's just something you have to understand. But again, what is different? Well, nothing is really different, right? So if you were forced to sell, that's one thing. But if you had your portion control, and if you had cash flow is king, not cash. If you had cash flow consistently coming into your portfolio that you could use, then to buy quality securities, whether that's silver, gold, or some other company that you have researched well and you're comfortable with, not to just go in and buy a bunch all at once, because we still don't know where the bottom might be, but you're buying the same thing that has all the same fundamentals that it did the day before at a lower price. So keeping your portion control under control and keeping your cash flow going continues to be what successful investors do each and every day. Now, if you weren't paying attention, if you were doing what you do best, you probably did not know that this was going on, or if you did, you certainly didn't have time to dig into why it was going on. And you probably missed a lot of the opportunity either to sell and get out before the massive crash began, or to purchase something that was on sale. And that's why we used to ask you to give us a call at guardianrockwealth.com in the contact us section, or get your texting app open on your phone and text the word life to 321-421-5213. There are always reasons for these things happen. They just don't happen to be fundamentally correct reasons. And the market doesn't always react in the most logical fashion, which gives those of us who are doing the research and are prepared and have our portion control under control all the advantage that we need. It gives us that unfair advantage that you frankly deserve. We'll see you again next time. This is John Browning, Guardian Rock Wealth out of West Palm Beach. And don't forget to check out our monthly written report at guardianrockwealth.com coming out tomorrow, or the morning update, where we also dive below the headlines each and every morning to make sure you're not just following the headlines, you're following what really matters for long-term investors.